This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. Today, my guest is Teshra Steffen Robles, and we are talking about personal money foundations. Teshra, welcome to the show.
Hi, thank you for having me. This is exciting.
Teshra, I think you are the very first financial organizer that we've ever had on this show. What is a financial organizer?
A financial organizer is somebody who is going to get all of your finances organized into one place. So for instance, if you're running a business, most business owners have a financial software system where all of everything's organized into one place. They do their invoices, their inventory, their expenses, their assets. It's all in one place. So financial organizer, in my case, is organizing that at the personal level as well.
So tell me, what does that look like? Tell me about your typical client and what do they look like when they first start working with you and how do you help them?
So my typical client is usually somebody they're very savvy. They're either in the corporate space and upper management, VP levels. They're either a business owner who's been running a business or several businesses for a very long time. So they understand profit and loss statements. They understand balance sheets. They understand how you need to keep track of all your money on a weekly, monthly basis, right? And then you pass it off to your tax planner. And hopefully you have all the best information so you pay the least amount of taxes, right, to begin with. So then what they do is they usually are so busy and so into their business or their corporate job because they're just fantastic rock stars that everything on the personal level is kind of gotten messy. So imagine if you had physically all of your debit card transactions or all of your trips that you went on or all of your paychecks coming in paper, and it was just scattered all over your desk. Take that into the digital space, and it's still scattered all over the digital desk space, right? They don't look at it very often. They end up trying to figure it out, scramble at the last minute at the end of the year, because then they have to give it to their tax person. Excuse me, something in my throat. And what happens is usually the information is inaccurate, but it's also not available on a timely basis so they can use it to make decisions. Should we buy a new car? Should we go on a trip? Do we get to spend more money shopping? Should we spend less money on shopping? So it's really important that they have that really kind of set up. So I do have clients who have lots of debt, no debt, lots of income, little expenses. There's a huge gamut of clients that I can serve, but the purpose of serving is so that they can have a very organized personal.
So what are some of the things that have really surprised you since you started this coaching business?
Surprised me. Let me see.
I'll tell you what. Let me cut you off, and I'll tell you. I'm going to make an assumption that I know is wrong. I'm going to say.
Go for it.
Clients of yours who are sophisticated and have successful careers and six-figure salaries, etc.
Mm-hmm.
Most people would assume they have everything already. They got their stuff together. They don't need any help. They're on top of the ball. They're on top of everything.
Mm-hmm.
How true is that?
It's not very true. So unfortunately, and it's not because they're not smart. It's not because they're not savvy. It's not because they're not dedicated. It's just because they are working these super long days, right? And then they go out to eat and they just swipe. And then the kids are like, Mom and Dad, I need money. And they go, what do you need it for? Swipe, right? And then all of a sudden, okay, we're going to invest in some passive real estate. We're not totally sure, but we're just going to dump this money into these commercial real estate deals because we know it's good for us later, but we're not totally sure how that affects everything. They just have so many pieces to it. You know, wife's got a business or wife has a job. You've got a kid who's going to college. You've got a newborn. There's just so many little pieces. And I think what is forgotten is that it's all running through a financial institution, i.e. your bank, right? Everything's going through your bank account. Everything's going through your credit card accounts. It's all out there. And very few of us are using cash. So it's not like you got to keep track of all the physical dollar bills that you're spending. It's all right there. So if you can have a customized system that learns as you go, that ends up doing it for you, and 3, 4 to 5 tips to check in with 1 hour a week consistently, no matter what, you're going to know exactly where everything is. And when the wife comes to you and says, hey, I want this, you go, you know what? Sure, we're good to go. Or the kid comes and says, I'm going to do an exchange program in Italy. Can we afford that? And you go, you know what? Absolutely. All we have to do is cut back on a little bit of what we're spending when we go out to eat, because I can see exactly how much I'm spending on a daily, weekly, monthly basis. Boom, we're going to be able to make that decision. So just like business owners, you're making these business decisions for your personal finances, which is another thing I'm passionate about. If you ask somebody, what is your most important business? They're all going to say the one that I have owned or created, or the corporate world that I work in. And that's completely wrong. Your most important business is your personal finances, because that's what you're doing all this other stuff for. You would not be working, you would not have a business if your goal wasn't to get those personal finances so in order that you can say, boom, sell my business, boom, walk away from my W-2 job. That's what it's all about. So we need to get back to looking at our personal finances as reading a personal profit and loss statement, reading a personal balance sheet. It's got to be run like a business.
I agree with all of that. A few minutes ago, you mentioned that it takes about an hour a week. What does that 1 hour look like? What do you look at during that 1 hour?
So the 1 hour week is what you should do is you should go in, and I specialize in doing QuickBooks Online. I don't use other things like, what are some of the other ones? Quicken. I don't use, say, Mint, some of the different ones. And the reason I like QuickBooks Online is at first it's very complicated. A lot of people don't like it because it does a lot of really strange things. Because my background is in accounting, I really kind of know how to move things around and how to understand. When you buy toilet paper, it means you have less cash. When you get cash, it means you have less of something else, right? There's always this, it always comes back to zero. So QuickBooks is very good about dealing with that as far as accounting principles go. So I use that program, but then I set it up. It is a business program. I set it up for you as your personal. And so we change all the categories, we change all the names, but it's still run the same way as a business. So anyway, what it looks like is that come in and do that. And when I teach you how to categorize different things, is your Netflix a subscription, or is your Netflix entertainment? Is your purchase at Walmart for home, or is your purchase at Walmart for toiletries? Things like that. You get everything categorized in exactly the right spot that you want to. Some people like massive detail. Some people don't want detail. So you can customize it however you want to. And that's what I really love about it. You can also change it at any point. Let's say, for instance, you want to know how much I spend on my wife's self-care, right? Okay, great. It's this big figure. But maybe she wants to know, how much am I spending on getting my hair done? And if I could cut that down just a little bit, that's something you might want to know. So you can change it up. So anyway, you go and get everything categorized. And then we do something that's called reconcile, which a lot of people do not do that anymore. And so we have to remember we're working with a computer system. They have bugs. They do things that they're not supposed to do when they're not supposed to do them. So this has two awesome benefits. One, it gets everything reconciled down to the penny. Okay. So if your bank account, $2,000 comes in from your paycheck, and your QuickBooks says $4,000 came in from your paycheck, unless you're reconciling that and realizing that that's an error, you've got the wrong information for your now decisions, for your future decisions, for your tax planning. So what we want to make sure we do is we get that straight. And what's really cool is not only do you have to watch it, but you also pay more attention to it. So that 1 hour a week, you sit down, you categorize things, which, by the way, after a while, QuickBooks starts to do it for you. So if you have 50 transactions in a month, pretty soon those 50 transactions in a month are still transactions, but they turn into 2 or 3 because QuickBooks has learned that this is where they go. So you sit down, they're all categorized, and then you go in and you reconcile. Take your bank statement, take your QuickBooks, and let's make sure that the two of them match. And when you start to get the hang of it, you just put in a couple of the dates, hit enter, and you get that wonderful picture of the zero that pops up at the top. Zero. You're completely balanced. So that's really all you do. So you would spend the first 15, 20, 25, 30 minutes just making sure that happened. And then the next rest of the 30 minutes, you sit down and you look at what decisions am I making? Let me look at how much the wife is spending on the hair. Let me look at how much we're spending eating meals out. Let us decide that we can take some of that money and moving forward and instead use it for a decision to go on a really fantastic trip to Italy. Or let's get some real estate. Let's start making some money while we're sleeping. in the passive income space.
Absolutely. And I think you mentioned the word foundation, but one of the most basic things about building wealth and getting your finances in order is spending less than you earn, right? And so,
Yes.
and it sounds like what you're describing is helping people understand where their money goes, right?
Yes, because most of the people I run into, when they talk about, people will say, "What do you do?" And so when people ask me that question, I said, "Do you ever wonder where all your money goes, or are you too embarrassed because you have so many credit cards, and not because you're dumb, but just because maybe you opened a new business and you had to live off credit cards at some point, and your business is thriving and so successful, you just haven't gotten back to taking care of those, right? Could be so." Or are you too busy to take care of it right now? Because not only do people want financial freedom so they can quit their job, work when they want to, not when they have to, they want time. And so if you're having to spend 40 hours on a computer system, or 40 hours figuring out your personal finances, or 40 hours fixing those credit cards when you start a new business, that's not very smart. When you come to see me, I can crank that stuff out very quickly for you. And then there I'm giving you your time, which at the end of the day, a lot of people say health is most important. I would argue that time is most important. Because if you're healthy and you don't have any time, that's kind of where it's about.
That's it. And now that you've had many clients, do you see patterns? I mean, what are Americans spending too much money on?
I'm going to have to back up just a little bit in saying that I'm not really a fan of that question, because the word too much means different things to different people. If you have a couple who just got married, they're both in middle management, they don't have any kids, and they spend $750 at Starbucks in a month, I would say with 5 children, that's way too much money. But they would say, "Are you kidding? I wish we spent more, because we go to different coffee shops, we go seek out different baristas, we have date nights together." So not too much. It depends. That's kind of up to you. So I would argue that the too much phrase should be, I can look at everything I'm spending my money on, and then I decide what too much is. The only thing I would say to that, though, is people are spending a lot of money on subscriptions that they don't understand that they have. And you know how there's that app out there that if you get the app, it tells you all the subscriptions you have. And I'm kind of going, so why would you pay for another app to tell you what apps you already have when your checking account already tells you that? And if you just dropped them into QuickBooks, you're going to be able to see exactly what you're paying for. So it doesn't make sense. It's like paying twice for something. And yeah, so I think that's probably the only space. I would also say that what people are not spending too much money on is investments. People talk about they want health, but they don't have a gym membership. They don't have a wellness coach. They don't go see somebody to take care of blood analysis. They don't go out and make sure that they have great vitamin supplements. People talk about that, but if you can spend, $200 for dinner for 2 people, why can't you spend $100 on supplements, and then the 2 of you go out and have appetizers and a few great glasses of wine, right? You can make that decision. But so I would almost argue that I see more of what people are not spending their money on, and then also getting really informed about real estate. I'm a huge believer of real estate and passive income. That's gotta be a portion of your to-do from day one. You turn 18, let's go for it. But yeah, so those kind of things. People are not spending enough money on investing in themselves, whether it's workshops, whether it's life coaches, health and wellness things. I'm definitely an investment, because then you've got your system all set up for you. So I would say, what are people not spending too much money on?
And how much do you think is cultural? I mean, cultures are different, but in American culture, we don't talk a lot about money, right? I mean, we like to brag to our friends about what a good deal we got on, on something. But in terms of our financial health, our salary, we kind of keep those things to ourselves. Do you think that's healthy? Do you think people should talk more about their finances?
I think that there should be a little bit of both. I think that sometimes people talk too much about their finances and other people don't want to know about it, or it makes, for instance, if you have somebody who's very well off and doing very well and somebody who's really struggling and trying to hide behind the scenes, it can put a lot of pressure or a lot of, self-doubt and that kind of thing onto that person. So I think that doesn't work very well. But I also think that having more conversations about it, if I have 2 or 3 credit cards, why couldn't we have the conversation about, is there an option of taking those credit cards and putting them onto one? Maybe we get 18 months of 0% interest. There are a lot of different tools out there. Or, oh, hey, I went out and I did a debt consolidation. Ooh, nobody wants to talk about that, right? We don't want to be saying I did that. However, that person might say, you know what? It was a train wreck. Don't do that. But they can't talk about it because then people go, oh, they had to have a debt consolidation. So there is a lot of stigmatisms attached to money. And I think that's very, very sad. But I also think that we need to be having the conversations about, yes, everybody should be a multimillionaire by the time they're 65, starting when you're 18, putting that money away, in 401k or whatever. Everybody needs to talk about the fact that there are ways to make money while you're sleeping, whether that's writing a book or whether it's investing in some apartment complexes and through syndication. There are ways to get life insurance policies that have cash value. That is very underutilized and not talked about. So I think that the conversations need to be about information. And it needs to be where if I come to you and say, hey, I heard about this, or this seems like it's kind of okay. And all of a sudden the person goes, no. All you can do is invest in the stock market. If you're not investing in the stock market, there was no other thing. Real estate's bad. And then all the real estate people say, oh, the stock market's bad. The stock market's bad. So again, we should have a little bit of both. You should have some of money in the stock market. You should have some of your money in real estate. You should, everybody says don't put everything in one basket. But then at the end of the day, depending on what field you're in or what you believe in, you're very adamant about it is the stock market or it is real estate. So I think conversations are very important. We just have to pick what we're talking about, unfortunately, with money. Mm-hmm.
You read my mind. I mean, that's one of the reasons why I started the podcast. On the podcast, we talk about real estate, we talk about the stock market, we talk about whole life insurance policies and infinite banking and all of the above.
Yes.
And you mentioned something interesting that, people, when they're 18, they should be told, or we should have that conversation with them saying, you know what, start investing now. Don't wait until you're 25, 30, 35, 40, et cetera. What other advice do you have for young people? I know, like, if you turn on the TV, all you hear is that young people are struggling, whether it's the high cost of college, whether it's the high cost of housing, whether it's the job market, whatever. What advice do you have for young people today?
So my first piece of advice is obviously the 401k. And that is really, when you really break it down, into numbers. Of course, the younger generation, I have 5 kids. My oldest is 30 and my youngest is 16. So I've been here, done this 5 times. And so what they're hearing that, what, you want me to be a millionaire when I'm 65 years old? That's so far out there. I mean, I might as well move to another planet to get that done. But when you put it down on paper and you show them something very simple, like if you took $38.54 every week from the time you were 19 to the time you were 26, you'd invest about $16,000 and you stopped. You never put a single dime. You turn 26 and you don't do anything. By the time you're 62, 65, you're going to have $2.2 million. And all of a sudden they go, wait, what? And then what's even more cool is you tell them, you know what, forget it. Just go to college, enjoy yourself. Don't start putting $38.54 away until you turn 27. And then you just do that. But then you have to put in $76,000 until you're age 62, 65. And you're only going to have $1.5 million, give or take, right? We're doing some average interest rates, obviously. But then they start to think. And then they go, oh, wait a second. $38.54. If I'm working at McDonald's at $15 an hour, $38.54, I could probably do it. So that's a good piece of actually showing them the numbers and actually getting them to visually see it. We all know that nowadays they're all about visual. Instagram, Snap, TikTok, it's all about the visual. The second piece of advice I would give them is they need to understand the concept of naming your dollar. Dave Ramsey is really great about that. Dave Ramsey's got some great stuff. I've got some other things that I like better, but he talked about naming every dollar. Unfortunately, when these kids are not touching any cash, what you find is that they're running their debit card so they never see their money. If they made $200 in a week and they physically got those $200, they take it and they say, okay, $50 is for my savings. $50 I'm going to name this for pizza. $50 I'm going to name this for my entertainment. And then all of a sudden they start to go, oh, okay. If I name my dollar, it's already been designated for something. And that can be really powerful for them. So I do an exercise when I speak at some of the Indian tribes and some of the high schools. I actually have them touch their dollars and give them specific names. So then they really, really tend to understand that. And then I'm just going to hit on one other piece. My other piece of advice for them is what we call stewardship and opportunity cost. Most kids nowadays haven't heard the term stewardship. And that's really important because stewardship really refers to money. So when they're getting their dollars, are they being good stewards? Are they using it to fuel what they want? But then more importantly, are they going to use it so that at some point they can give back to society, give back to some passion that they love, whatever that passion might be? Excuse me, they might have a favorite band that they love. And how great would it be to facilitate a place where that band could come? Or maybe one of their family members have passed away and they have a certain disease that they would love to donate to. That's about stewardship. And then that's kind of where opportunity cost comes in. We all know that if you have a cookie on the table, if you eat it, then you can't have it later when you go home. But if you go home later and you've already eaten it, well, you can't have both. You're always giving something. So if you eat the cookie now, you don't get it later. But if you save it for now, you can't eat it now, but then you get to save it for later. So this concept of opportunity cost, it affects everything we do in life. And when they start to understand that if you make $1 billion, you either spend the $1 billion or it sits in the savings account. But either way, there's still this opportunity cost going on. You have to decide what you do with your money. They kind of tend to assume that billionaires can do anything they want. And that's kind of true, but not completely true. Because if a billionaire wants to save all of his money, he can't go out and build a spaceship to go to the moon, right? There's a cost. So I think that stewardship and the opportunity cost are concepts that are not taught and not really instilled in these kids. And there might not be anybody to instill them into them for a long period of time, but they need to get the initial seed. And I love the name of your podcast, Money Seed, because it's about planting a seed. I can't follow them around for the rest of their life, but I can plant that seed. And then somewhere along the line, they don't get to be in their 40s or 50s and go, nobody ever told me. Actually, somebody did tell me. So then that falls on them, and it's about them making their own choices.
Teshra, I believe you have 5 children. Can you give us some tips on what are some tricks of the trade that you use to raise your kids?
You're talking financial?
Yes, financial.
Financial. Okay, yes. So when my children were little, I had them before they were actually making money. I would pay them in beans, little like kidney beans or pinto beans or whatever, and they had little boxes. And when they got paid with the boxes, the box was you had your tax, which was to pay to the government because somebody had to pay for the road. Of course, in our case, somebody has to pay for the floor that you walk on, that type of thing. And then you also have to make sure that you are tithing. The 10% concept is huge. Whether you're a firm believer in the Bible or not, that 10% needs to go somewhere. And I really believe that by sowing that seed of giving outward first, even if it's giving to a charity, whatever you want to do, then all of a sudden, instead of going, I have to give 10% away, you go, wow, I get to keep 90% of what I made. So it has a reverse thought process in your mindset. So having that piece, and then having a box where we're going to save for something long-term. So, we saw that Cookie Monster doll in the store and it cost this much money. We're going to save for that. And to them, that's long-term, right? Yeah. And then having a what if box. Okay, here's a box where, whatever you want to do with it. If the popsicle man comes by, we'll buy ice cream. If we're at the store and you want to buy some candy, you can buy it. And then being very, very consistent that if you've given them that what if money, and they go to the store and they want to buy a candy bar with it, you can't say, sorry, you've had too much sugar today. Sorry, you can't have it before dinner. You have to go, wait a second, that child's thinking and they're doing that. So when they're young, that's really, really important to instill in them. And then at some point when they do get paid, they get their first paycheck or they make some babysitting money, it's very important to turn that into cash. Go get the cash and get the cash in dollars or quarters and split them up into those boxes. It's no longer beans, it's not actual cash. And there's that scientific evidence that says when you're feeling things with your fingers, it touches the brain like writing with a pencil because you're actually feeling the movement of the pain, the paper, that type of thing. It's really creating those synapses that will stay there forever. And then once they get to be older, it's super important that when they get their first paycheck, make a huge deal about it. and let them blow it to shreds. You know what? You just made $200. Forget paying the government. Forget giving back to other people. You go back and do whatever you want with it. You found a job, you made your first paycheck, take a picture of it, keep it so they can have it forever. And then the next paycheck, say, okay, now you got to blow it. And let's see, do you have any money left over? You got nothing. It's all gone. So then they get that little example. And then start to be like, okay, now we're going to require you to go back and practice what we've taught you. And then depending on their age, you know, if they're 11, 12, 13, 14, maybe 15, you're pulling the parent card. This is the way we're going to handle your money. But when they start to get to be 15, 16, depending on their maturity, you have to say, so did you take your paycheck? Did you tithe? Did you save? And they go, nope. And you go, okay. And you got to let them loose. And you have to let them fail. And when they go work a summer job and they make $5,000 in the summer and they come back at the end of the summer and they got $20 left to their name, that's a really good lesson for them to learn. But you can't be on them all the time, nagging them, you know, because you're raising adults, not children. So then they figure it out very quickly. So the other thing is to get them a debit card is a good practice for them. And don't have an overdraft protection. Make sure that they get an overdraft fee at some point, because they will. And that first fee, let me tell you, when they find out that they spent $5 at Taco Bell and it cost them $35, they don't do it again. They never do it again. So yeah. And then of course, talking to them about, okay, you're 15, you're 16 years old. We're going to go call Vanguard or whatever. We're going to reach your account. We're going to get this started. Why not start at 15 or 16 as opposed to starting at, 18 or 19 of that scenario we talked about earlier. And then the very last thing I'm going to say is that a lot of parents don't understand that your children can have credit starting when they're like 1 year old, which is a little ridiculous because then you have to worry about identity theft. But your child can be an authorized user on one of your credit card accounts. So if you have exceptional credit card history on an American Express Gold card or something really wonderful, make sure you get an authorized user and have your child use that card and teach them how to use a card. But obviously you're responsible, but their credit is going to skyrocket. And then when they turn 18, all of a sudden they can go rent an apartment at college because they have credit. They can get a car. So, but you have to be careful with that, because if you screw up your credit, you're going to screw up your kid's credit. So you have to
I think that's
really
great advice.
that.
I've heard a similar version of the credit card advice where someone said basically, yeah, take out a credit card in your child's name, but put a limit on it, like $300 a month or $500 a month or whatever. And then you, the parent, you pay it off. I think it's the same idea. Yeah. Basically have that child develop a credit history. And so by the time the child is 21, 22, 23, they have perfect credit and they're kind of starting off their adult life with perfect credit, which is a huge gift to them.
Yeah.
About the whole, the thing with teaching kids how money grows. I have 2 kids. And when my older daughter was 12, I said, look, on your 12th birthday, here's the thing I'm going to do. Whatever is in your bank account on your birthday, I'm going to double it on your birthday. And I'll do this until you're 18. Yeah. And so the idea was that, at some point they'll think, hey, you know what, maybe I should save my money. And then I have my birthday coming up and my dad's going to double it, whatever. And it's interesting how it never really landed with her. It never really connected. She's 17 now and she has never had more than 50 or $60 in her bank account on her birthday. It's like you mentioned that example where, yeah, she has money from here, she gets money from there, whatever. But like with a lot of teenagers, she ends up blowing through it. And that has never really connected with her, that, you know what, I could be getting more at my birthday if I would just kind of save money and think long term. But that's how you live and learn, right? So, yeah.
Yeah. That's how they learn. And I do, watching my 5 children, I've watched them. It's not like they all hit the same age. And because I kind of trained them money wise in the same way, they all had the same outcome. They didn't. Some of them, it took them longer. Some of them, they didn't get it at all until they became much older. But eventually they will. And I think sometimes what we forget as parents is our job is to instill the foundations that we want in our children. And then they have to take it from there. And we can never force them into good decisions. Just like, we can't force them who to marry or not to get pregnant too early or, things like that. We can't force those decisions on there. And money's the same thing. We can't force it on them. And they will figure it out. They might not tell you and they might not figure it out well, but they're going to know deep down inside that they did have the tools and they were taught the way they were supposed to be taught and that they were given options. But, money's no different than any other decision in life. We make them, we don't make them. They're good, they're bad. And so So she'll get
Yeah,
it. She'll
every
get it.
kid is different.
You
That's
watch.
exactly it. Every kid
You
is
watch.
different. And some kids, I'm always amazed at how some kids are just natural born entrepreneurs. You know what, like age 8, they start buying and selling baseball
You know
cards or
what?
something. And next thing you know, and some kids are just not. And so, yeah.
Yeah, it's kind of crazy. I was watching, I was looking at Russell Brunson's funnel challenge, and there was a kid on there. I think he was 13 or 14 years old, and he just went out and started doing funnels, and he just started making a gajillion, bucks. And I went, okay, some kids don't have it. Some kids aren't interested in it. Some kids are not numbers. And that's another thing too. If you're not a numbers person, we all know we have those people who go, oh my gosh, what do you mean 2 + 2 is 4? I don't even get that. And it's not because they're stupid. It's just because they're a fantastic artist, or they make movies, or it's just a different way that they're set up in their brain. And that's a tough one. It's a tough one if you're not a numbers person.
And Teshra, how did you get into this topic, this field? You earlier on, you touched on the fact that you have an accounting background, but is there anything in your childhood or your upbringing that kind of forced you to really look at money in a different way?
Absolutely. So when I was born, I lived in Dallas, Texas, and I was living among the very wealthy, the kind where all of my clothes in the closet were from Neiman Marcus, that very high wealthy. And then when I was 8 or 9, we moved to Hawaii. And the reason being is another long story for another time. Moved to Hawaii, and we ended up being so poor that my parents, we had to steal toilet paper from school. Don't tell them I told you that. But we had biscuits for weeks on end. Jelly was something great. I actually did not have a bed until I was a junior in high school. So from the age of 9 to 10th grade, I actually slept on a carpet square. And I remember getting up every morning and making my carpet square because it was so great. In the meantime, I was a scholarship student at a very, very well-known preparatory school, Punahou High School. President Obama went there, so that's kind of how some people might know it. But long story short, I was amongst the wealthy of the wealthy. We have ambassadors' kids from all over the world. You have very famous actors, very famous musicians, all kinds of people, senators, governors, kids who go to this school. So here I was, super poor, in this very, very wealthy atmosphere again. But it wasn't my wealth when I was little. And of course, when I was little, I kind of saw it, but I didn't quite get it. So then graduate from high school, move on. And what I found, and then I stepped into the accounting world, made some really good money. And the thing is that at my school, we were taught these concepts. These were part of education. These were part of high school classes. These were part of middle school classes. And so when I got out, it's like, okay, I know how to do this. We're kind of good. Parents didn't really know how to take care of it, but I knew how to take care of it. And then I decided to be a stay-at-home mom. So then I pop into being a one-income family. My husband was the sole income earner in San Diego, California, with 5 children. It was crazy. So what kind of happened with all of this is it wasn't about, I was able to see the poor of the poor, the very, very wealthy, and I could see that neither one is better or worse. What's better or worse is not knowing what you have and what you have to deal with. If you're super poor and you have $10, $10 buys a lot of biscuits. If you're super wealthy and you make $100,000 and you have $150,000 in bills a month, that's not going to do you any good at all. So it's not about the two, which is better, which is worse. But I was able to see both extremes. And I saw that at the end of the day, everybody in the two extremes, everybody in the middle, everybody's going to absolutely thrive if they know exactly what they have at any given time. Sure. My mom knew exactly what she had at any given time. My dad knew exactly what he had at any given time. I knew exactly what I had at any given time with 5 children. So it didn't matter, the ups and the downs, whatever. It was about in the knowing. So that's very cool. How I got into this.
Teshra, I love what you're doing. I absolutely believe that we need to have more conversations about money.
Yeah.
Where can people find you if they want to work with you?
Yeah, perfect. So reach out to me through email. My company is called Teshra Do You. And the reason for that is I want people to go out and put their name in that. And we all talk about how we could be anything we want in life. Well, if you sit on the couch and you go, I'm going to be a professional ballerina dancer, it's not going to happen. You need to get up and go do you. So I'm a big believer in doing you. And where that starts with is your personal finances, what's going on. If you want to go to ballet school, you're going to have to figure out how to get there. That's where it starts. So at teshradouyu@gmail.com. And then I also have a phone number. You guys can feel free to reach out. Text me. It's 619-392-6187. And then, of course, I have my website, teshraduu.com.
Perfect.
So
I'll put those into the show notes. Teshra, thank you very much for joining us today. I love your story. I love what you're doing, and keep up the good work.
Yeah, love what you're doing too. I look forward to listening to more. So thanks again for having me.
Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.